Welcome back to the deep dive. Our mission here is pretty simple. We take these incredibly complicated processes, the ones buried under just, mountains of jargon and paperwork, and we turn them into a crystal clear, step-by-step blueprint.
And today, we are tackling a giant, the Indian import-export ecosystem. This isn't just some trend, right? It's genuinely one of the biggest opportunities in global commerce right now.
Absolutely. India is exploding as a trade economy. I mean, whether you're dreaming of importing the latest gadgets from overseas or you want to be the one exporting incredible Indian textiles, spices, even engineering goods to places like Africa or Europe, the potential is just immense.
But there is a huge barrier to entry, a massive one. Most people, even the really ambitious entrepreneurs, they just get paralyzed by the confusion.
They hit that documentation wall.
Exactly. They hit the wall, they have no idea which government code to use, and they're frankly terrified of getting their entire first shipment seized or just stuck at customs for months.
That paralysis, that's the exact problem we're solving today. You sent us the sources, the definitive guides, the government checklists, the best practices, and we have synthesized them into the complete zero confusion blueprint. This is the only guide you're going to need to start an import-export business in India and do it legally and profitably.
And that is our deep dive mission. We're delivering that blueprint starting right at the very beginning with the foundational choices.
Okay, let's unpack that. Because before you even think about a product, you have to choose your basic operational model. And there are really two core models that define everything else.
The first is the import model. It's pretty straightforward. You're the buyer.
Yeah.
You source goods from another country. Let's say it's machinery from China or maybe cosmetics from Dubai. You ship them into India, you pay the duties, and then you sell them into that massive Indian domestic market.
And the flip side is the export model, where you're the seller. You either manufacture your own products in India or you find amazing Indian-made products, you ship them abroad, and then you get paid in foreign currency.
And even within those, you have more specific paths. Are you a manufacturer-exporter where you actually make the thing you sell? Or are you a merchant exporter?
Meaning you just trade.
Right, you're purely a trader, buying from local manufacturers and selling internationally.
And on the import side, you could be an import distributor for a specific brand. I know the sources pointed out one path that's really hot right now, which is the B2B wholesale exporter. Apparently, there's huge demand for bulk Indian goods in Africa, the Gulf, and parts of Europe.
So the very first step for you, the listener, is to be honest with yourself. Which of these models actually fits your strengths, your capital, your network?
That's a huge decision, but it's only half the battle. Our sources were completely unanimous on this. Choosing the wrong product is where 90% of people fail. They see something cheap on Alibaba and just think, that's it, I'm rich. Why is that such a critical mistake?
Because they are only looking at the purchase price. They ignore all the hidden costs and the actual market reality. For an export product, you have to check 5 things at once. Yes, high global demand, but also low competition. It has to be easy to transport. It can't be restricted by law. And this is the big one. Can you maintain a 20 to 40% margin after you factor in shipping, duties, everything?
That margin after all the fees, that's the whole game. So what are some of the product categories that are really working right now?
On the export side, you're looking at high-volume things like textiles and garments, spices and agro products, quality machinery, auto parts, and, of course, India's pharmaceutical industry is massive. For smaller markets, handicrafts still do really well.
And for imports?
Still huge demand for electronics, cosmetics, home and kitchen products, and all kinds of smartphone accessories. And the origin really matters. Machinery often comes from China, luxury perfumes from Dubai.
But you can't just guess. You need data.
You absolutely need data. You have to use tools like the DGFT Export Data Portal or private trackers like Export Genius. These show you the actual trade volumes, real numbers.
And what are you looking for in all that data? I mean, a big number isn't enough, right?
Not at all. You're looking for product lines that show consistent year-over-year growth. That tells you demand is rising. But then you have to filter that for what I'd call white space product lines, where there aren't like 10 giant players already dominating the market.
So rising demand plus fragmented competition.
That is your entry point. That's the sweet spot.
Okay, so the product is validated with cold, hard data. Now we hit the next wall. The legal stuff, the licenses. This is where if you mess up, your profitable shipment just becomes a very expensive metal box stuck at the port.
Right. Section 2, Mandatory registrations. First, you have to set up your legal entity. It could be a sole proprietorship, but for serious scale, a private limited company is what most experts recommend.
And you need your domestic IDs first, right? PAN, Aadhaar, and of course GST registration. You're still an Indian company.
Once that's all in place, then you apply for the international passport for your business, the IEC.
The Importer-Exporter Code. This is issued by the DGFT, the Directorate General of Foreign Trade. This sounds like it would take forever. How long is the wait?
It's actually surprisingly fast. If you have your PAN and GST sorted, it's usually just a small government fee and can often be issued in a single day. It's the key that unlocks global trade for you.
Okay, so you have the IEC. What about banking? You can't just use your personal savings account for this, can you?
No, absolutely not.
Mhm.
You have to open a dedicated current account and, critically, have it enabled for international transactions and for receiving foreign currency.
Any specific banks that are better for this?
Well, banks with strong trade finance desks are your best bet. Think HDFC, ICICI, Kotak, maybe SBI if you're looking at government export schemes down the line.
Okay, IEC is done. Bank account is open. What's the next mandatory step? The digital key to customs.
That's your ICEGATE registration. Think of ICEGATE as the mandatory digital handshake with Indian Customs. You have to be in their system. This is the portal where you file all your electronic declarations, the bill of entry for imports, the shipping bill for exports. If you're not on ICEGATE, your goods cannot clear customs, period.
So IceGate saves you from literally running around the port with a stack of papers.
Precisely. It digitizes the whole mess. Now, there is one more certificate, the RCMC, the Registration Cum Membership Certificate. It's not mandatory for every single product, but it's a really smart move
Why bother if it's optional?
because it connects you to the export promotion councils like FIEO or APITA. These councils are invaluable. They give you market intelligence, they can help you find foreign buyers, and most importantly, they're often the gatekeepers for government incentives and subsidies.
So it's about being eligible for all the benefits.
Exactly. You're building a fully compliant structure.
Okay, the legal launchpad is built. Now for the real world. Finding partners and actually moving the goods.
This is where the rubber meets the road. You've got to find and, more importantly, verify trustworthy partners, whether that's a supplier in China or a buyer in Europe.
For imports, the search starts online, right? Alibaba, Made in China, places like that. But also trade fairs, like the Canton Fair.
Trade fairs are huge. They let you actually meet the people and touch the products. But meeting them is step one. Step two is verification. You have to see their ISO certificates, ask for a live video tour of the factory, and then you have to compare the sample they send you with the bulk order that arrives.
What happens if you skip that? If you just trust the pictures online?
The sources are full of horror stories. You could end up with a 40-foot container filled with absolute junk. Or worse, counterfeit goods that customs will seize and destroy on the spot. Always use a secure payment method like escrow with a new partner. It's your safety net.
Okay, and for exporting. How do Indian businesses find buyers?
It's a similar path. B2B platforms like TradeKey are good. For niche items, Etsy or Amazon Global can be fantastic. And don't underestimate LinkedIn. You can connect directly with purchasing managers in other countries.
And when you pitch them, you need a professional package, right? Not just an email with a price.
You need a full kit, a detailed product catalog, a clear pricing sheet, exact packaging specs, and you need to set a firm minimum order quantity, your MOQ. Don't overpromise.
Deal is struck. Time to ship. What are the main options?
You've got three. Air freight, fast, expensive, good for small or high-value items. Sea freight, much cheaper, necessary for bulk, but it takes a lot longer. And then standard couriers like DHL or FedEx for just sending samples.
And this is where the paperwork really explodes, the documentation density.
It is a massive paper trail, and it all has to be perfect.
Right.
For exports, you're looking at the commercial invoice, packing list, bill of lading, certificate of origin. The list goes on. For imports, the most critical document is the bill of entry, which you file electronically.
And the entire system, all of this, hinges on one thing, the HS code.
The Harmonized System Code. It is non-negotiable. It is the single most critical piece of data for your business's financial health. Every product has a unique HS code, and that code determines the exact import duty you will pay.
No, wait, if you hire a CHA, a customs house agent, to handle all this, why do you, the entrepreneur, need to worry so much about the HS code? Isn't that their job?
That is a fantastic question, and it gets to the heart of it. The CHA files the code, yes, but you are ultimately responsible. You have to verify it yourself. The key takeaway is this. Always check the duty on the customs.gov.in HS code finder before you place the order. Because if there's a mistake, you're the one stuck with a massive tax bill that just erased your entire profit.
Which brings us back to the CHA. For a beginner, is hiring one really mandatory?
I would say it's indispensable. I mean, trying to navigate customs clearance, port operations, and all that documentation by yourself as a rookie, it's a recipe for disaster. A good CHA is an investment. They are not an expense.
Makes perfect sense. Okay, let's move to the final and maybe most stressful section, money. How do we ensure we actually get paid and don't lose our shirts in the process?
Payment security is everything. For big orders, the safest method is a letter of credit, an LC. This is where banks on both sides guarantee the transaction. It minimizes risk for everyone.
And for smaller deals.
You might use an advanced TT, which is a wire transfer where the buyer pays maybe 20 or 30% up front. For tiny sample orders, you can use Escrow or PayPal.
Beyond just getting paid, there's also Forex risk, currency fluctuations.
The silent killer. Yeah.
Okay.
If you're importing from the U.S. and the rupee weakens against the dollar between when you order and when you pay, your costs just went up. You have to manage this proactively.
How does a small business do that? You can't control global currency markets.
No, but you can use tools like hedging or forward contracts with your bank. A forward contract basically lets you lock in an exchange rate today for a transaction that's going to happen in, say, 3 months. It removes the gambling from your business plan.
That's smart. Okay, so all of this leads to the ultimate financial question. Your widget costs $10 in China. How do you know the real cost when it finally lands in your Indian warehouse?
You calculate the final landed cost. You never, ever start a business without doing this calculation. If you skip this, I can almost guarantee you will fail.
Let's break that down for everyone. What goes into the landed cost calculation?
Okay, you start with the product cost, then you add packaging, then shipping air, or sea, then insurance, then the big one, the import duty from the HS code, then your CHA's fees, then any domestic marketing costs, and finally the GST. Your $10 widget with a 30% duty is already $13 before it even gets on a boat.
Wow. And you need that 20 to 40% margin on top of that final number.
On top of that final number, it's the only way to build a sustainable business.
All right, let's wrap up with the biggest mistakes to avoid, the warning signs.
Number one, by far, not checking the HS code and the duty before you order.
Number two, not verifying your supplier. Skipping that video tour or sample check is just gambling.
3, importing restricted items. You have to know the difference between banned, which is illegal, and restricted, which needs a special license.
4, no written contract. A verbal agreement means nothing internationally.
5, miscalculating shipping costs. They change constantly, and they have to be in your landed costs.
6, agreeing to an unrealistic MOQ from a buyer. Don't promise what you can't deliver.
And 7, no trade insurance. Things go wrong, ships have problems, containers get damaged. You need that protection.
So that's the blueprint, the complete path.
It is. The checklist is clear. Select your data-backed product. Get registered. Get your GST. Get that fast IEC. Open the right bank account. Register on ICEGATE. Find and vet your partner. Hire a good CHA to handle logistics. Get your documents right, especially the HS code. Ship the goods.
Yeah.
And then get paid securely.
So the journey on paper ends with that first successful transaction. But the sources all say real success is about scaling through repeat orders. And we know that first order is, well, it's organized chaos. You're testing your CHA, you're confirming the HS code, setting up the LC for the first time.
The first order is chaos, exactly. But the second one should be seamless. So how do you make sure that happens? What proactive systems do you need to build before that first shipment even arrives to make sure the second order is the beginning of true scale?
Is it systemizing your supplier verification so it's a checklist you run every time? Is it setting up those forward contracts to manage Forex risk long term? Or maybe it's doing an audit of your CHA right after that first shipment to make sure they're the right partner for the long haul. That groundwork for scale, that's where the real business is built. Something to think about as you start your own deep dive.